if I told you that a quiet decision by a government agency could skyrocket your insurance premiums, crush your cash flow, and make your real estate portfolio a whole lot riskier almost overnight? Well, in today's video, we're diving into a major development that could seriously impact commercial real estate investors across the board. This is none other than the NOAA data shutdown. We'll talk about what that is and the growing insurance crisis that is impacting so many people and investors across the country, and what it actually means for property values, underwriting, and your overall investment strategy. Let's break it down. What's going on, wise investors? Welcome back to the channel. As always, we are here to help you make informed investment decisions to skill up with your commercial real estate investment portfolio and overall to build and unlock wealth to live life on your terms. Now, the NOAA, the National Oceanic and Atmospheric Administration, just announced that it is halting its 55-year program that tracks billion-dollar extreme weather events. This is an extremely big deal. Now, why? Well, we have for decades seen NOAA be the commercial property insurers disaster database. They are the ones who track all of the data when it comes to large disasters that insurance providers pull from to set their rates, right? To decide what markets they want to insure, what assets they want to insure. And overall, they use the NOAA disaster data to assess risk, to price insurance, to model future events. And with that data gone, insurers are now essentially flying blind. So why could this trigger an insurance crisis? Well, let me give you 3 fast reasons this is a potential nightmare for commercial real estate investors. I don't know if you've been living under a rock for the last few years, but as commercial real estate investors, and really just many real estate investors in general, we have seen insurance prices and premiums jump 10% plus year over year, many more than that, depending on what market you're in and what actual factors are impacting your insurance. And we've also seen with those pricing jumps an actual decrease in coverage in many situations. So how is this going to impact you as a commercial real estate investor? Well, without reliable federal data, insurers will assume worst case scenarios. They're going to model for the absolute worst and they're going to hope for the best, but we all know how that's going to impact us. Premiums are going to go up, capacity is going to go down, and this could happen within 30 to 60 days of this going into effect. So what are commercial insurers going to do? Well, they're going to pass the buck to us, commercial real estate investors. They are likely going to spend big money on private risk modeling firms to go in and replace that NOAA data that they aren't getting access to anymore. So guess who is going to pay for that? Well, of course, they're going to pass that on to us, the property owner, and you can expect those costs to show up in your policy renewal, which we're already seeing these kind of jumps, and this hasn't even gone into effect yet. Now, also, data blindness. Without NOAA, brokers and underwriters lose a major tool for evaluating property vulnerability, which means less disaster preparedness, harder time getting competitive quotes, higher deductibles, and stricter exclusions, which ultimately leaves us holding the bag and taking on and bearing all of that risk while the insurers provide all of the insulation to themselves and pass those costs along to us. So this is going to have a major real estate investor impact. And you're probably wondering, well, what does that actually mean for us as investors? Well, if you own property in coastal or storm-prone regions, I live in California where we have a lot of fire risk, and fire impacts have significantly impacted insurance costs in California. If you live in Florida and you've dealt with hurricanes or other areas that have dealt with hurricanes, you have seen these types of issues arise year over year as well. So this is where you need to pay attention. You need to also make sure that when you're analyzing a deal, right, that you are budgeting for increased insurance premiums this year and beyond. I can't tell you how many people are using the owner's previous year insurance costs, and they're not factoring in the fact that every year insurance is going up, and you should be factoring this in year over year into your analysis, into your modeling, into your pro forma, because these are going to be real expenses that shrink your profits and overall cash flow, and you want to prepare for that on the front end, not caught by surprise. Also, realize that lenders may tighten up underwriting, especially in disaster-prone areas, and how this could impact your ability to get financing or what the overall terms and structure of that financing can look like. Property values and high-risk zones could also see downward pressure due to higher ownership costs. With operating expenses going up, that's most likely going to impact net operating income, which we all know in commercial real estate, net operating income significantly is tied to the value of your asset. So if you see NOI going down because some of these insurance costs are compressing your net operating income, it's also going to compress your overall value of your asset. And you need to be thinking about and planning for these things ahead of time. So what should you do? How should you plan now? Well, this isn't the time to panic, as my good friend Gary Jonas always says, don't panic. It's the time to get proactive and just to, again, think about how you can factor these things into your modeling on the front end. So here's what I recommend. Review all existing insurance policies. Are you overpaying, right? Are you underinsured? At least get an idea by taking an audit and understanding how this actually impacts you today. Also, I recommend you talk to an insurance broker. Ask what they're doing to source accurate weather modeling. How is this showing up in their quotes, their bids, and their overall policies, and understand real time what it looks like and what proactiveness are they taking on their side of the industry. This can give you some great insights and help you just overall strategize and think about how to factor this in to your specific situation. Consider insurance captives or risk pooling alternatives if you're a larger portfolio holder, right? If you've got a big portfolio, this isn't just some small, move of the needle that is going to show up. This could impact you in a really big way. So understanding that there are other options out there like insurance captives or risk pooling, these are things that you may want to dive into a little bit deeper. Also, I would recommend just building in higher insurance costs and reserves into your underwriting models going forward. I always love to overestimate things, and if it comes in under, great, we're winning. And if it comes up to that estimate, right, that at least we factored it in and we planned for it on the front end so we don't have any surprises that could completely throw off your entire deal. Look into fortification upgrades for storm-prone properties, right? This can reduce premiums and improve resiliency. So just getting proactive, a lot of the things that we did at my hotels up in Lake Tahoe was preventative measures to reduce fire issues, which again helped us show our proactiveness to our insurance providers and ultimately remove some of the additional costs or get some of the additional clauses or issues that may impact us or spike our premiums reduced and taken off completely in certain scenarios. You can obviously do this in other ways based on what your specific insurance issues or risks tied to your property, your region, your area may look like. So just think about how can I be proactive in making this asset more prone, to not have the impact that some of the storms or the fire risks or the hurricane risks or whatever it may be impact my property. So this can reduce your premiums and improve overall resiliency in your asset and help you build that good relationship with your potential insurance provider. But just thinking about some of the long-term implications. This NOAA decision is just one piece of a much larger puzzle, right? Climate risk, whether you believe in it or you don't believe in it, we'll leave that aside from this video. At the end of the day, when it comes to what we're seeing in real time is climate risk is growing and it's impacting commercial real estate assets, and how we insure them and the costs and what we model into our overall investments. We're also, thinking about the overall impact in government data support is shrinking. And so how are the providers that we obviously get insured by going to get what they need if they're not getting it from government data? What does that look like from a long-term perspective? How are they going to get that insight that they need? Private sector risk models are stepping in, but guess what? They're stepping in at a premium, and guess where those additional costs are going? They're getting passed right on to us. So we got to think about how that models in over the long term. And lenders and insurers will get stricter and they will get more selective. We've already seen many big providers pull out of, not only cities or states, cities or markets, but states altogether, right? So this is something that we got to think about based on where you are investing, location-wise. Do you have the ability to get the insurance and the protection and the coverage that is going to be required for you to have a sound, solid, and long-term stable investment without these major fluctuations impacting the financials and your overall returns for you, or if you're raising capital for your investors? You need to go into this with eyes wide open. Extremely important to understand. And the commercial real estate investors who understand these dynamics and bake them into their strategies are going to be the ones that come out ahead. And the ones who don't and have, rose-colored lenses, blue sky, nothing bad is going to happen, and they don't factor in some of these things, are going to be the ones that get caught with their hands in the cookie jar or ultimately lead to distress, which leads to them having to, sell out of an asset with, them not hitting their returns, or even worse, right? Maybe losses. Those are things that we can avoid. So if you're a commercial real estate investor, you can't afford to ignore what's happening behind the scenes in insurance and risk modeling. And that is why I wanted to bring up this particular topic, because it is something that we're going to be tracking. I will be very interested to see if the government steps back in, if they find a way to subsidize this. Depending on how this all plays out, I will be sure to keep you guys posted. So if you got value out of this content, if you want help staying ahead of these trends, don't forget to subscribe to the channel. If you have any questions, comments, things that you want to dive into or have us follow up on, drop those down below. Don't forget to hit that like button if you got any value. Share the channel with other passive income investors or active commercial real estate investors that are looking to build wealth through commercial real estate. Don't forget to check out our free Facebook group. We've also got the Wise Investor Collective mastermind program, one-on-one coaching options, and a lot of other great stuff, which is all linked down below. Until next video, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.